Hi, I'm Craig Cunningham, and I'm a residential real estate broker here in Santa Fe, New Mexico. I'm doing a series of videos to talk about what's going on in the residential real estate market, both here in Santa Fe and around the U.S. Today, I'd like to talk to you about a topic that's very much on everyone's mind: mortgage interest rates. Not too long ago, during the COVID period, mortgage interest rates dropped to historic lows as the Federal Reserve and the U.S. government enacted a series of financial policies designed to shore up the U.S. economy. During COVID, Americans were able to finance their homes for as low as 3% and sometimes even a little bit lower. But now interest rates have started to go back up. When interest rates were at 3%, the housing market around the U.S. was really on fire, and it became increasingly difficult to find houses, and as a result, now we have a bit of a housing shortage. But in 2022, because of the same financial policies that kept the economy going during COVID, inflation rates started to rise precipitously, along with them mortgage rates. Now, an interesting thing is mortgage rates are not tied directly to the interest rates that the Fed sets. It's normally tied to the 10-year Treasury bond, and that can be a little bit more variable. Right now, mortgage rates are in the low 7% range for 30-year mortgages, more than double what they were. As a result, many people are holding off on buying homes, hoping they'll go down. But here's why you shouldn't do that. Number one, it's highly unlikely that we'll ever see interest rates in the 3 to 4% range again, and we've got good reason to hope that we don't see that. That's because more than likely it would mean that there was a significant financial crisis in the country. Number two, historically, mortgage rates have always been in the 7 up to the 11% range for most of our adult lives, and so actually rates currently in the high 6s and low 7s are not bad at all. Believe it or not, in the 80s, interest rates actually got up to almost 18%. Number three, believe it or not, waiting for interest rates to go down could cost you more money in the long run. Why? Because we still have a major housing shortage in Santa Fe and in the United States. And in many parts of the country, housing prices continue to increase. Not by the same level as they did during COVID, but they still are increasing. So that means if you wait another year or two, you'll probably be paying more, even if interest rates do drop a bit. So you're really looking at the analysis of how much do you want to pay for a house, and if it is 5% more in a year, is it worth it to wait, versus whether or not you're paying 7% now or perhaps 6.5% next year. The only way to really explore all of this is talk to a qualified mortgage broker, and they can help you run the different scenarios on both the amount of house that you qualify for, what your monthly payments would be at different interest rates, and also based on your credit scores and financial situation, how much you're able to put as a down payment, so on and so forth. I'm happy to give you the names of 3 to 4 qualified lenders here in Santa Fe who also lend around the country, and people that I feel very good about in terms of their knowledge of mortgage interest rates and the mortgage market in general. So if you reach out to me via text, email, or give me a call, I'll be happy to provide you with that lending information. The more information you have, the better informed you are to make the decision and to hopefully get into your dream house. The other thing that these folks can do is they have a variety of great financial programs for first-time home buyers, through the federal government, through the state, even through the county. And for people at the higher end of the spectrum, if you're looking to buy but you still need to sell, doing bridge loans, jumbo loans, and all those sort of things. So thanks for taking the time to watch this video today, and hasta la vista from the city different in the land of enchantment.